Hi there, Serial Trader here. Let's have a check-in with the major US indices, and we'll start off with SPX. Now this melt-up continues, but the real question I'm sure most people are asking is, well, how much higher before it at least has a pullback, if not outright reversal? And there's no, 100% answer as to where it stops, but we can get some idea of where it may be likely to stop based on some relationships we can do. So we'll just try and get a Fibonacci cluster, or a structural cluster here. So we'll do the overall retracement of this entire decline from the all-time high, and I think I'll just throw up the 786 relationship there. Okay, and that would bring us to 2813.72, which happens to be right around just our classical resistance levels of these previous highs, and that's basically the range between 2800 and the exact level 2815.15. So right in that range of the previous top, okay, or tops. So that's one relationship to be looking for. We have some more, and you can just do some classic relationships or textbook relationships of impulse waves. So wave 1 to be equal, so this is the distance traveled in wave 1 projected off of the termination point of wave 4, and the equality relationship of that, so where wave 5 would equal the distance traveled in wave 1 projected off the termination point wave 4, that brings us at 2804.74. So right around this other relationship, and also still right around these previous highs. So that's a common relationship in an impulse wave, having 1-5 equality, especially if the third wave is the longest, and wave 3 is longer than wave 1. So to have wave 1 and wave 5 be near equal in length, that would be a typical relationship. So that's something. Then we have some reverse Fibonacci relationships, and just the most recent pullback we had here, we can do the reverse fib of that, and then we'll have the 1.382 and 2.0, those two very common relationships I always like to look for. So we've gotten past the 1.32, but the 2.0 gets us to 2796.13. So let me just get rid of that 1.382 since we already surpassed that. So again, nice cluster here of relationships, Fibonacci relationships, wave relationships. So there's that. There's another we can look for, and that's the distance traveled in wave 1 through 3 projected off the termination point of wave 4. And the 618 of that distance is another interesting relationship, and let's see where that gets us to. All right, so the 618 of that gets us to 2834.30, so a little bit above the previous highs, but still right in this range in the low 2800s. So that's interesting. Now, if I drill down here on the shorter time frame, there's some shorter term structural relationships I can likely look for. And let's see what we got here. So this is where we ended triangle wave 4. And then I would say we got a 1 up, 2 down. And then this is probably wave 3 nearly complete. And then we need another wave 4 and 5. So with that in mind, all right, so here if we just want to label this, the subdivisions, and probably a 1 up here, 2 down, working a 3, and then there'll be a 4 or 5, and we got to drop the degree on this obviously. And okay, now let's try and work this out here. So if we have the now just bear with me. If we have 1, 2, let's do a relationship for wave 3, common one. Okay, projected off 2. All right, so we got the equality and then the 1618. All right, so equality, if wave 1 and 3 are equal in length, which would require a shorter wave 5 for that to be valid, because wave 3 doesn't have to be the longest, but it can't be the shortest. So if it's the same length as wave 1, then wave 5 will need to be shorter than that. So that would come in at 2789 if we hit that equality relationship. And if we do the 1618 for wave 3, that would get us to 2855.62. Seems a little lofty at this point, but I'll leave it up there. And then you'd still need a wave 4 and a wave 5, but possibly a shorter wave 5. So we'll have to keep that in mind here. Something like this, right? And maybe 3 goes a little higher, right? Come back in 4, no overlap with 1, up in 5. So that also gets us, interestingly, up to this channel line here. Now let me just zoom out here, scale this properly. Okay. So this this previous channel that we were in, and going back, that contained the basically the price action of the 2016 to the all-time high rally there. And this bottom channel line contained the pullbacks, but then it got broken since September, and then it actually served as resistance on the retest, and we came down. Now maybe coming up one more time to retest this to see if it serves as resistance, which fits perfectly well in this expanded flat wave 2 scenario. So that would kind of be the upper area of where I would see this going before we find some sort of pivot. But it doesn't have to go that high, but it's just something to look for if we go there. So here you can see there's a bunch of relationships basically clustered in the high 27s to mid 28s. So where will it stop exactly, to be determined, obviously, but this is certainly a very important area of interest. Also, this previous channel support looking to reestablish itself as resistance if we test it once again. So a very pivotal area here, I think, for the market to get a reaction in. And is it possible that we just keep going, no pullback, fly right through it and make new all-time highs? Yeah, sure, it's possible. But at this point, that does not seem to be the most likely scenario. I expect there to be a significant reaction in this area, and at least, even in the most bullish scenario, at least some sort of proportional three-wave decline, maybe into the 2600s or something like that, right? That would be like the most minimal of pullbacks in my opinion, even in the most bullish overall scenario. That would seem to be warranted, right? And obviously in the more bearish scenario, as this is illustrating with the expanded flat wave 2, we'd be coming down hard to make new lows below the December lows. But before any of that's really important, we have to look for a reaction in this significant area with all these different relationships lining up, and also this trend line, and just the most basic of previous highs and resistance coming into play here right away. I think this is a very interesting area to look for a pivot, but it's still going up for now, and there's no sign of a reversal. And you'd want to see at least some sort of candlestick sell signal and a close below the T line, or a VIX spike, some sort of signal that tells you something's changed from this bullish melt up phase that we've been in for the last couple months almost at this point. Okay, so that being said, if we do get into this area and it just stops going up, starts drifting a little sideways, maybe even starts coming down, gets some sell signals, at that point, it'd be a pretty attractive top fishing play, just selling futures short, maybe having your stop 100 points away from the all-time high. So say we get up to here to 2850 or 2840 or something like that. Well, at that point, you're only 100 points away from the all-time high at 2940. You sell some ES futures contracts short. This is my idea anyways. Sell some ES futures short, maybe even just one contract, for a starter. Sell one contract short, so basically 100 points. You'd be taking about $5,000 of risk for 100 points on one contract. Your stop would obviously be just above the all-time high. So risk 5,000, and then if you're looking for at least, even in a bullish scenario, 200 or 300, I'd say 300 point pullback. So if you stop at 2850, go to 2550 or 2600, about 300 point pullback. So that's good 3-to-1 risk-reward ratio. And obviously, if it really gets bearish, it's an even better risk-reward ratio. Could be multiples of that. But that'll be an attractive area to at least attempt another fresh short position, knowing that, okay, your risk is between that area and just the all-time high, which at that point won't be that far away if we get there. So anyway, that's what I'm looking for. I'm looking for just some sort of reaction with all this, Fibonacci and structural relationships and the trend line and everything. Definitely looking for something to happen up in this range, but we'll see this week if something happens, or if we just continue the melt up. And this could still take another week or two to finish itself off, maybe even towards the end of the month. We'll have to see, but this is what I'm looking for anyways. All right, now if we go to the Thinkorswim candlestick chart. So here we played around a bit on the 200-day moving average. Went above it, came down, tested it, did a doji. Then we did another gap up on Friday. We did not close that gap yet from Friday, so that's another kind of warning sign, another gap up in the still overbought condition. Obviously coming into those previous highs pretty quickly here. So this is definitely not a place to be going aggressively long, although so far it would have worked out, but these things don't just keep going forever, even though it seems like it at times. Just like on the way down, it just seemed like no matter how much you tried to buy, it just kept going lower, while we're having the opposite scenario in this case. But as you can see, that did change, and in a significant way, and I would expect that to play out again this time, but in the other direction, at least to some degree. Now on the weekly chart of SPX, see if there's anything notable here as far as the candlesticks go. Okay, we had that bullish engulfing weekly, then a weekly doji, and now another bullish week. So that's kind of a weekly bullish doji sandwich, right? Big green bar, doji, big green bar. So certainly nothing here of concern on the weekly. Got above that 50-week simple moving average. So definitely no sell signals yet here on the weekly, although since it is the weekly, by the time there's a sell signal on the daily, this will lag behind, right? But yeah, nothing. Starting to get in the overbought condition here on the weekly oscillator. That's worth mentioning. Okay, that's weekly. Now let's go over the Dow Jones. Anything interesting here? So the Dow mirroring the melt up here on SPX. And do we actually have a gap up here on the Dow? Let's see, the doji high from Thursday was 25,558. The low of Friday, 25,564. So yes, we do have a gap up in the Dow here in the overbought condition. We're getting very close to the previous tops and resistance levels here in the Dow as well. And those two areas of interest, the first one being 25,980 and the next one being 26,277. And obviously the Dow in a 5-wave impulse as well, looking quite mature. On the weekly here, same idea. We had a weekly bullish engulfing, then a doji, and now another big green bar on the weekly. Starting to get overbought on the weekly oscillator. So nothing here on the weekly as far as signals go. Okay, NASDAQ composite. Have a look at this. Now on the composite, we're basically right here at the 200-day simple moving average for the composite. And let's see, did we get above? Didn't quite get to this level. So this previous resistance level, that came into play at 74.8651. We went as high as 74.7728. So just below that level, and wouldn't be surprised at all to break that. And obviously that would confirm that at least the NASDAQ's in the expanded flat scenario, where wave C makes a new extreme above the previous levels there. But NASDAQ looking mature in its 5-wave advance, obviously in overbought conditions still on the daily. And right there at that 200, it's the only one that hasn't quite smashed through the 200 just yet. Now on the weekly, anything here on the weekly? So we're a little bit above the 50-week simple moving average, starting to get into the overbought on the weekly oscillator. But certainly no sell signals here on the weekly just yet. All right, so all the markets basically are in the same scenario. Now let's have a look here at the VIX. VIX is still right down here. And the VIX looks just ready to launch, but so far it's been failing to do so. And it's right at the lows, as low as 1479, and it closed at 1491. So I would expect the VIX anytime now to just at least have a good bounce up, if not something more sustainable. But until it at least starts breaking above previous short-term resistance levels, I'd say let's at least get above, let's call it 18, so 1789. Once we close above that level, that'll be a fairly significant change here. But for now, the VIX just dripping lower as the market melts up, and I'm sure they'll switch in conjunction with one another when it happens. But on the VIX VVIX tool, still on the neutral signal, but again, early signs that we could be forming an SPX sell signal once again. So the first step, we have the VIX VVIX divergence. So VIX making a new low, but VVIX making a higher low. So that's the VIX VVIX divergence. And then the next step is for VVIX to get above this red moving average, which it was sort of trying to do near the end of the day. It's basically on it right now. We need that, and then after that we need SPX to get below its blue moving average, which at this point is in the mid 2700s. So we have just the early signs of potential sell signal. We have that divergence, VVIX making a higher low, VIX making a lower low, but that's just step one. So a lot more needed here before we get a confirmed sell signal, and maybe once we do, that'll be finally the top, but we'll see. All right, no trading tomorrow due to the market holiday, so we'll check in maybe sometime during the week if we get some sort of interesting reversal action. But if it just keeps melting up, no need to update on that, at least until the next weekend there. All right, Serial Trader signing off.